Right, hello everyone. So we're going to recap US30 for the 30th of October. Here is the picture. So it's GDP day. Down here you have the pre-London, which is incorrect. It was actually an hour later on this chart, but I've done that, changed that on the actual chart. So it's only this picture that needs changing, which I'm not going to do because it's not worth it. But that is what we can see. Push price down through the London session and then back up with the New York session. Then that retests the key sell area and we continue selling. Nice, clear, simple. Let's go to the chart. So this is the higher time frame. What we was looking for is you got the consolidation there, building up bearish pressure. So he's looking for a continuation down to close this gap and retest this grey area here. Now we go to the small time frame and we focus on the 30th, which is here. So before that it takes place, we go to the previous day. This is your discount buy area, premium sell area. So these are both valid because you've got nice impulse move up with the New York Open and you got a key area of selling which is retested with nice impulse move down. So that is also valid. So you drag them over and then you start looking at the London opening. 5 minute time frame, zoom back, and this is where we focus on. Same setup as always, so I've changed the pre-London here, you can see that's there. And let's just zoom in a bit. So here's your mop, here's your pre-London, and you got your London opening here. This is the UK times went back by an hour. So this is slightly off, so the timing is slightly different on the charts. So what you can see here is selling pressure. You had, I think this was consumer confidence, but this is a news event here, and you can see that runs along there. So London, the session takes place, pushes down, retest the mop. I probably wouldn't have taken that because it would be buying above these levels. What I'd want to see is a push down further into this area, take these lows and then start to buy. So what you do is you wait. At the London opening there's no real trades, so you wait, push down, and the first liquidity grab is here. This is liquidity grab. It's retesting that news events level, so this is a valid sell here. Let me just put that on and we're going to put that as pink as always. So we're following the trade template of pushing up, taking liquidity, retesting the key level and continuing down. So you enter around here, downwards move. By the time you hit London opening, move to break even, take some partial profits, and you run at break even for the rest. Price retrace up a bit, retest the pre-London, retest the London sell area, which is here. So that's the premium sell area for the London session, and that's where you get that impulse move down with the earnings from that area. So it's a simple, they're selling, retesting and continue selling. So hopefully you didn't get knocked out here. Your entry should have been around here, so that would have been good too. I know some people also took the sell from over here too, and if not, they entered as the downwards move took place for a nice little scalp. So that's the London session. Price pushed all the way down. This is also a buy setup because you're going to take the previous day low here. What you'd be looking for as price comes down is some sort of resistance here, some sort of reversal. And as you can see, price pushes all the way through, takes the previous day low, then starts the reversal. So that is a buy setup here. This is a valid buy setup with the New York Open, which I'll put that on in a minute. So let's do this one first. So that is a buy there. And that would be to move to break even as you hit the previous day New York Open, which is that blue line. So then we move on to the New York session. Pre-New York there, high volume time, and then the New York Open here. New York Open takes place, pushes down, takes liquidity, then starts the upwards movement. I in fact took a buy from here, but then got closed early. So that is a valid buy setup on the open, pushing down, taking liquidity, then showing bullish pressure towards the upside. And that pushes all the way up, takes the Asian session high. That's where you would take most profit. By this time, you would have taken a little bit of profit here too, because it's the London opening. So it's the London premium sale area. Price pushes up, and that pushes up into yesterday's premium sale area. So that's the New York sale area from yesterday that we dragged along. You can see we hit that, started to show resistance. So that is a valid sell there. That would have resulted in small profit down here, or if you entered early and got this wick here, it would have been a break even, because as the price pushes down, you move to break even, and then you take partial profits at the major areas that may act as support. So you can see here Asian session high runs along, and that's the first area you can expect bullish support. Now price pushes up one more time, and this is what I try and teach to the members. If you're looking for a reversal, a liquidity grab like this is a lot better. It gives you a lot more confidence. So here, once you start to see these bearish candles here, that is a better sell setup than over here, because you're taking that liquidity too. So that is a valid sell setup, and what you'd be looking to do is to target down here where the New York opening is. So as price comes down to this area, you'd be looking to take partial profits at the New York open, and that's following the trade template on the higher time frame, which is push up, retest a sell level, and retrace back to the New York open at least. And that is it for the day. That day, nice and simple, nice and clear. The main trade for this day was this sell from here, because we had a sell bias. So this was pushing up, and then we started to sell with the previous day premium sell area, which is there in grey. So hopefully that all makes sense. It's all very clear. Your entries would have been up here. You would have moved and managed your trade as the price goes down. You wouldn't have been taken out. You would have had hit. You wouldn't have taken any stop loss hits. Nice, clean, simple price action. Total entries, I would say 3 for the London session, and 1, 2, 3 for the New York session. This would have been profit. This would have been small profit, or at worst break even, and this would have been a clear profit. 3 for each session. Now we move on to the next day.